This strategy is so boring and simple. You literally do the same thing every single morning. And if I had known about it when I first started learning about trading, I would have become profitable way faster. And it's literally so simple that it feels like cheating. Let's get right into it. So this strategy is literally doing the same thing every single day, and it works on any trading asset. So futures, forex, crypto, stocks, but it works best for futures, and that's what I trade. And this will literally be the last strategy video you'll ever need to watch, because after you watch this, I mean, it really can't get easier than this. So what I'm telling you today, I'll literally sell like everything that I own just for this knowledge that I'm handing to you for free on a silver platter today. This knowledge would have made me instantly profitable, and I would have charged $10,000 for this information. That's how much I would have paid too, but I decided that today I'm gonna give it away all for free because of how helpful it can be. So all I ask of you is to pay attention and take notes. Before I get into strategy, you should know that the teacher and the strategy is legit, and I want to clear up some misconceptions about trading. So first, last month, just on a single funded account, I was able to make almost $11,000. And this is only on one funded account. I trade multiple funded accounts. And on Top Step, you can see I've received many payouts, and on Apex as well. And I've also streamed the strategy being traded, and you can see a member inside my Discord has tracked it throughout a month. One student that I've taught has also backtested the strategy himself and made over $80,000 on a single ES contract. And this is an average 1 month ES backtest. So you expect maybe around 5,000, 6,000 per month on one contract. Imagine if you have 20 funded accounts. That can get you over $100,000 per month. So the strategy that I'm talking about today is my own 1 hour strategy. It runs from 9:45 a.m. Eastern Time to 11 a.m. Eastern Time. And the good thing about it is that you don't need to look at any charts or news before and after this time. And if you're a busy person, you can just block this time frame out on your schedule and purely focus on trading during it. And you don't have to trade the weird lunch, afternoon, and nighttime hours. All you need is this 1 hour, and you can make thousands. So when and what are we trading? You want to choose one trading instrument, whether it's futures, forex, stocks, crypto. In this case, I like futures and I like ES, the S&P 500 futures. When are we trading? You want to choose one of these following trading sessions. I like the 9:45 a.m. to 11 a.m. window, and that's the one we'll mainly be focusing on in this video. I traded the ES futures S&P 500 every day for the last 4 years in the AM session, so I can read the market like the back of my hand. You want to become a specialist. The more you see the same thing over and over again, the more you can read the market and actually know where it's going to go. A misconception I want to get out of the way is that trading doesn't have to be complicated. Stop making trading complicated. The market can only be in two states, okay? The first is in a trending state, right? We can either be in an uptrend, we're making new highs and higher lows. And the second is a downtrend, we're making lower highs and lower lows. Just by looking at this, I mean, trading them is obvious, right? Anytime the market pulls back in an uptrend, right, you can just long here, maybe set a take profit at this high or at a 2-to-1 risk to reward and place a stop just beneath the low, right? And for the downtrend, same thing. You can just short on any of these pullbacks or even the break. It's a simple win, right? Now, the second state the market can be in is in consolidation or chop. Now, how do you trade this? To trade this, all you're doing is long the bottom of the chop and short the top. That's all you need to do to trade the chop. Long the bottom, short the top. Do not try to force a trend trade in a chop trade. Do not try to force a chop trade in a trend trade, right? So if we're making lows and highs like this and we're ranging around, right? Don't buy at the top. Don't think it's just going to suddenly turn into an uptrend. Just short the top and long the bottom. And right, if we're in an uptrend, stop trying to short against the trend. Just buy the dips. And by knowing these two key concepts, that's how you can keep yourself extremely profitable within the market. Let's look at some chart examples. So right, if we're in an uptrend like this, extremely obvious. We can see a pullback with a couple of red candles. You can long here, right? Put your stop loss somewhere that makes sense. and to take profit at a positive risk to reward. And then if we're chopping, as you can see, right, we have this key line that every time we hit, we just bounce right back off of. So instead of trying to anticipate a break, right, just look for some confirmation and short into the lows. So short the top, and if you want to, you can long the bottom, but in this case, shorting the top makes more sense. I want you to stick to one strategy. Don't hop strategies. You might think that trying more strategies might increase your rate of success or even just knowing more information, but no. You don't want to be the jack of all trades and the master of none. You want to become the master of one thing. So I want you to stick to one instrument, whether it's futures, forex, stocks, or crypto. Stick to one trading window and stick to one trading strategy. After trading the same strategy on one instrument every single day for a year, you will succeed. The second thing I want you to do is to backtest this or any strategy. If you don't have any data, you're going to fail. If you don't know the strategy works over multiple years, you're essentially gambling with no advantage, or you're just trusting the words of some random guy online, including me. So you really want to verify this yourself and that the strategy works for you. Trading becomes easy once you backtest because you know it'll work, so you can trust your strategy. But if you don't have a backtest and you don't know the strategy works, then psychology is already going to be a problem. You don't even know the strategies works. You're just going to be scared of taking losses. Next, 1 week of paper trading is not sufficient. A lot of people learn the strategy, try trading for 1 week, maybe it fails and loses, maybe it wins. That's not enough information. You should backtest a minimum 6 months to 1 year to get screen time and data. If your backtest is not successful, keep adjusting it until it is. I know this strategy works because I have years of data to support it, but I still want you guys to try it out on your own after this video. So what exactly is this strategy? Step 1, determine where the market is going to go, which is the drawn liquidity. Step 2 is the entry. Step 3 is managing the trade. And that's it. It's 3 steps. All we want to do is capture a small move every single day and stack it on funded accounts or on a large contract size. So if we can just catch a 4 to 5 point move on ES or a 20 to 30 point move on IQ, right? That would maybe like $300, $400. And we can either up the contract size or increase the amount of accounts we're trading on, that can quickly become multi-thousand-dollar days. Now, why do we not want to capture full moves? Because not every single day is going to give you that insane 100-pointer move. We can still catch those giant moves with this strategy, but we also want consistent income every single day. Let's get into step 1, draw on liquidity. You're going to want to mark your key levels during this step. We're going to trade into these levels or watch for reactions off of them. And I want you to ask these questions while you're trading. Are we bullish or bearish? Are we trending or chopping? And did we have news earlier at 10 a.m.? So wait the first 15 minutes of market open to form so you can avoid the chop and mark out the important orb levels. You're going to want to mark out the orb high, orb mid, and orb low. Next, I want you to mark out the current day high and low. And you can do this automatically with this indicator. We can use the indicator PO3 by 2 degrees on TradingView to see what the current high and low of the day is, and it'll update as the day changes. The next level is the previous day high and low, then buy side and sell side liquidity, and finally the London high and London low. The London high and low runs from 3 a.m. to 4 a.m. Eastern time. So there's 2 ways to trade these levels. The first way is to trade into the level. So you can see we have some sell side liquidity down here. And if we're looking to take a short, right, all we have to do is target the sell side liquidity. And we don't even have to put the full take profit there. We can always take profit when we're up maybe 1 or 2 risk to reward. So the second way to trade it is to watch for reversal or continuation through the level. So we can see here we have our orb high and orb low marked out. The orb low is the red line and the orb high is the green line. As we come up and form the orb high right here at this red candle, we can see we get a rejection immediately, which gives us sign for shorts, so we can short and trade it into the orb midline. And you can see every time we hit the orb high, we can simply just take a short with some confirmation and target previous low, or even just target the orb low. But we can see we just need a small part of the move. And even as we break the orb midline, right, look how many entries we're getting. Getting a short here, a third one over here. And even when we break the orb low, right, with a bearish confirmation, it still continues trending down. Now, one thing to note is that, right, we can always reverse at any of these key levels. So even if we hit this orb low, if we get bullish confirmation, then we could take longs. A general rule of thumb is if we're trending, you want to trade into a level. So here we can see we have a London high and also overlapping with the daily high. You could take a long and put your take profit, or have your direction as longs and try to trade into that level. So we can see, right, we start down here and trend all the way up into that London high. But you don't need to capture the whole move. But if you know in general where the market's going to go, you can just take a piece of that move. And if we're chopping, you can trade against a level to target another key level. So look at these candlesticks. They look pretty wicky and funky. So as we form our orb high around, or I think around here, market comes up, and it doesn't really get enough movement upwards. And then we can see we get displacement down here with this bearish candle, right, forming a bearish fair value gap. And then all you can do is enter shorts, right? Where are the obvious targets? You could target previous lows or midline and the orb low represented by the red line. When determining draw, keep time in mind. So anytime a new 5-minute, 15-minute, 30-minute, or 1-hour candle forms, you want to keep those times in mind. For example, let's say it's 1:14 and at 1:15 a new 15-minute candle is about to open. This new 15-minute may pump and cause us to miss your entry. So maybe you want to get in before that new 15-minute. And a common reversal is at 10 a.m. So let's say it's 9:59 a.m. and it turns to 10 a.m. That 10 a.m. could bring you a reversal in the trend. And if you guys want this board, PDF of my strategy and my orb trading strategy indicator, I'm going to leave a link in the description so you can grab it for free after this video. Also, within the board, I've included all these examples and some trading fundamentals you might want to know when trading this strategy. On to the second step is the entry. So this can be off of a new 1-minute candle. And this is some sauce, guys. Like, this can really help you get insane entries. And I'll explain that in a minute. Next is a fair value gap, which everyone knows. Inverse fair value gap, the 9 moving average, and a break of VWAP. So let me show you why this new 1-minute candle is insane. It can give you insane risk rewards. So let's say we're in a very strong downtrend, and this new 1-minute entry only works well in downtrends. You don't really want to use it for if we're chopping. What the fuck am I saying? So let's say we're in a very strong downtrend. Looking at this chart, we can see on the NASDAQ on the 1-minute chart, it's just straight dumping the entire day. And you can even tell at the beginning, right, we have our orb high, orb low. We break under the orb, making us bearish for the day. And right, you'd only be looking for shorts since it's just a downtrend. But we can see after a break of orb, you could enter on a new 1-minute candle like this and place your stop up very tightly. And you can just catch an insane trade. Even on here, right? If you enter on this 1-minute, even though it's a green one, you can place your stop maybe above the previous candle high, and you still catch an insane move. Or on this candle, for example, right? 0 drawdown. Do you see that, guys? There's not even a wick. Or this one here, no wick at all. Here, you enter, you get slight pullback, but it doesn't go back to that previous candle high. Even here, right? We have a small wick. If you have your stop loss, slightly above the entry, right, you can catch still an insane risk reward here. And finally, we hit a key level and starts retracing upwards. But even in this uptrend, look how full these 1-minute candles are. You have these 3 that have almost 0 drawdown if you enter on a new 1-minute. But overall, the trend is downwards, so we want to keep looking for shorts. So once you get some confirmation like this, right, you could enter on a new 1 minute here, new 1 minute over here. But look at these. These entries are insane. If you enter short on this 1 minute, almost zero drawdown. You see that wick? This 1 minute, almost zero drawdown again. And even here on this green candle, if you enter short here, your stop loss, if you put it somewhere above here or even above this 1 minute, zero drawdown. And again here, after this green candle, enter here, it doesn't even wick up. There's just no drawdown. And then again on this 1 minute, finally to make a new low in the day, right? Look at this wick. There's just zero drawdown. And even here, you enter short, zero drawdown. So that's how powerful entering on a new 1 minute is. Now, general rule of thumb of the strategy is that your risk to reward should be a minimum of 1-to-1. So you want to be risking maybe like $200 to make $200. And another good risk reward would be 2-to-1. And you could go for 3-to-1 as well. And if you really want to, you can place your take profit at the drawn liquidity, which is from the first step that we mentioned, if you want to catch a very big trade. So take profit on ES, usually I recommend around 5 to 10 points, or at the drawn liquidity, stop loss 4 to 6 points on ES or under a key level. And if you're just starting out, you could just go for a 1-to-1. So maybe like a 4-point stop loss and a 4-point take profit on ES. And I think on NQ it should be around a 10 or 20 point stop loss and a 10 or 20 point take profit. But note, the entry is not important as in drawn liquidity, because if you don't even get your entry or your drawn liquidity correct, you don't know where the market's going to go. Like, these entries are not going to really help you. Like, if the overall trend is upwards and you're trying to short, I mean, no entry is really going to help you if you're shorting an uptrend. And the second keynote is that you may lose on a steep pullback. So even for uptrending, right, we can still have pullbacks that stop you out. So you can always enter lower if you're actually right about the trend and you're confident that it's going to go to that drawn liquidity. And what you should also do is limit yourself to 2 losses per day, which means if you're risking $200 per trade, right, you shouldn't be down more than $400 in a day. The reason why you limit yourself to 2 losses a day is to prevent tilting and revenge trading. Because once that starts, it's usually going to snowball and cause you to lose your account. But even if you're already losing 2 trades, it's probably because your idea isn't right or the market conditions are not good. If you're in an uptrend and it pulls back, it stops you the first time and then stops you the second time, I mean, there's a small probability that it continues trending up, but maybe you're just wrong about that idea in general. So you don't want to try that again. We're already wrong twice. You can just accept your losses for the day, move on to the next day. The third step is to hold your trade to take profit or stop loss. So if you win your trade, you're done for the day. You make your, $500, $1,000, $2,000, $3,000, call it a day. If you'll lose maybe at most $800, $1,000. You know approximately how much each day you're going to be winning or losing, which makes it very easy for you psychologically. So this strategy is essentially just following the trend or trading the chop. You can make this more simple with only trading the orb levels that I showed you earlier, or you can make it more complicated. If you want to be able to predict where the market's going or know exactly what's going on with the market, you can add ICT, so it's extremely flexible. But by making 4 to 10 points on ES per day, so like $200, $500, you can easily scale and build up your income by stacking funded accounts. So on one account, right, if you're making $500 a day, that's not much, but you can take a payout from that and reinvest it into more funded accounts. So if you're trading with Apex, for example, and you have 20 funded accounts, making $500 a day, 20 times 500 is $10,000 a day. And that's just off of a small move. So suddenly these giant days, like it's not out of reach. It's very doable. Let me show you an example of a real trade that I took. So we can see on this chart, right? It's ES 1 minute chart. Overall trend was bearish. We can see by the daily candle here, also the left part of the chart is a little bit cut off, but it was trending downwards. We can see our orb levels are marked out. So we have orb high, orb low. Coming into 9:45, we form our orb low and kind of just chop around here, come up and then push down and take out orb low. So you could try to short this, but you kind of have like a failure of continuation. So it wicks down and comes back up. And then if you just wait for more confirmation, you can see it's still moving downwards, but then look at this. We have a strong candle upwards. So I wanted us to kind of retrace into something else before I want to continue with the short. Just because I saw all this chop before, right? You don't want to be shorting the bottom of the chop. That's just not a good idea. Remember what I said earlier? You want to short the top of the chop, long the bottom of the chop. But if we're trending very heavily, then that's where you can just jump the gun. Like if this setup looks something like this, we were just straight dumping, right? And we just break this level, then I would enter short. But because we have this chop from before, right? You want to trade the chop. So I'm waiting patiently and we can see it runs up, takes out orb high. Now this is a possible trade you could have taken, the reversal. So after this 1 minute pumps like this, or even this one, you could long into that orb high and make your, $800 or so. But my overall, trend and bias is downwards, and we can see we have a low of the day right here. So I wanted us to come down and take that as our first step to draw on liquidity. So as I'm watching it, I'm overall bearish. Draw liquidity, I'm marked out as low of day, but I'm not entering right yet because I know we're in chop. So I wait for us to go up. We see we have a reaction off the orb high eventually. It comes down, inverse this bullish fair value gap, and that's when I knew to enter. The inverse of the bullish fair value gap, I went in short, right? The final drawn liquidity, remember, it was low of day. But for me, I don't need to capture the whole move. All I need is just a small piece of the pie. So I target my 4.5 points at the midline, the orb midline marked by this white line. And that's when my take profit hits in less than around 2 or 3 minutes. We can see eventually we do actually have a clean run down to the low of day. So that's pretty much all the strategy is. It's very simple, right? Just know your drawn liquidity, mark out those orb levels, get a good entry, and make sure if we're trending, right, get in on those pullbacks, and if we're chopping, short the top of the chop and long the bottom of the chop, and then hold to your take profit stop loss, max 2 losses per day. If you guys want this board and a PDF of my strategy, as well as my orb trading strategy indicator, I'm going to leave a link in the description of this video so you can get that for free. Now, learning trading was confusing for me in the beginning because there's a lot of gurus, confusing information online, and scammers, but I decided I'm going to change that. So if you guys want to learn direct one-on-one from me, I'll literally pay you $1,000 if I don't get you to profitability and get you to that trading payout. So if you guys are interested in that, I'm going to leave a link in the description as well. It's currently a waitlist. By the time you're watching it, it might be open, but just check the description and there should be a link down there. Until next time.